Hey everyone, welcome back to Corporate Decoder, the place where we decode corporate filings. Today we're diving into PERRIGO's latest proxy statement, and let me tell you, it's a real page turner if you enjoy reading about executive compensation and board nominations. Get ready for some insights into how PERRIGO is trying to steer its ship. First off, what is a proxy statement anyway? In simple terms, it's a document that a company sends to its shareholders before an annual meeting. It contains information on things like who's running for the board of directors, what proposals shareholders will be voting on, and how much the top executives are getting paid. Think of it as a cheat sheet for shareholders to make informed decisions. This proxy statement is for PERRIGO's annual general meeting, or AGM, happening on May 1, 2025 in Dublin, Ireland. If you are a shareholder as of March 3, 2025, you get to vote on some pretty important stuff. So what's on the agenda? Well, shareholders will be voting on electing 11 director nominees, ratifying the appointment of Ernst & Young as the company's auditor, approving executive pay, renewing the board's authority to issue shares and opt out of certain preemption rights, increasing the maximum number of directors, and approving amendments to the company's governing documents. PERRIGO has been busy refreshing its board lately. Patrick Lockwood-Taylor joined in 2023, Julia Brown also in 2023, and Jonas Samuelson in 2025. They are even proposing Kevin Egan to be appointed. The company highlights the importance of experience and skills of board members and ongoing partnership on succession planning. The company claims it is stabilizing, streamlining, and strengthening. PERRIGO says its operations are more stable, the portfolio and structure has been simplified, and they are directing resources to prioritize high growth areas. We'll see if the numbers back that up. Now, let's dive into the financials. For fiscal year 2024, PERRIGO reported net sales of $4.4 billion, which is actually down from $4.7 billion the prior year. Adjusted operating income, however, increased to $0.6 billion, a 6% jump. The adjusted operating margin also expanded to 13.9%, up 160 basis points. This is all important because executives get paid based on these numbers. While adjusted earnings per share came in at $2.57 compared to $2.58 the prior year, they say a chunk of that was due to some issues with infant formula. It is worth keeping in mind that this includes benefits of various streamlining efforts happen close into dasam ER. The company says it is achieving synergies related to the HRA Pharma acquisition with $55 million in savings. Their supply chain reinvention program also yielded $42 million in benefits. They've also been actively managing their debt with strategic refinancing moves, and shareholders get a little love too, with the quarterly dividend increased by 5%. The proxy statement includes a section on pay versus performance required by the SEC. It compares the total compensation of the top executives with the company's performance. These metrics include things like relative total shareholder return and currency neutral adjusted operating income. For 2024, Patrick Lockwood-Taylor, the CEO, had a target annual incentive of 120% of his salary, but the actual payout was 63.7% of that target. Other NEOs, or named executive officers, also saw similar reductions based on company performance. We can see they're not afraid to pull back on executive bonuses when targets aren't met. PERRIGO's Talent and Compensation Committee determined that these pay decisions appropriately reflected the company's performance and strategic priorities. However, our performance fell short. Payouts are below 100% of target, varying based on individual performance multipliers. What else do we learn? PERRIGO does not allow hedging or pledging of PERRIGO stock. There aren't any big perks to be found, and there are no single trigger change in control cash severance benefits. Good risk mitigation and independent compensation consultants are key. PERRIGO has an insider trading policy which prohibits hedging, monetization transactions, and pledging company securities. This is pretty standard, but it's good to see it in writing. And of course, no corporate filing would be complete without a mention of ESG. PERRIGO is focusing on climate, packaging, people and communities, and responsible sourcing. They claim to be aiming for net zero emissions by 2040, reducing packaging and promoting inclusivity. The company describes board compensation, including retainers for committee members and chairs. All non-employee directors also received annual equity awards in the form of restricted stock units. Looking at who owns the company, the directors and executive officers as a group hold a very small amount, less than 1% of PERRIGO's ordinary shares. The big institutional shareholders are the Vanguard Group and BlackRock Inc. Let's wrap up with some of the key proposals that shareholders will be voting on. Proposal 1 is the election of directors. The board is recommending a vote for each of the 11 nominees. Proposal 2 is about ratifying the appointment of Ernst & Young as the company's independent auditor and authorizing the board to set their pay. Then there's Proposal 3, the advisory vote on executive compensation. The board is recommending that shareholders approve their pay packages. Proposal 4 asks shareholders to renew the board's authority to issue shares under Irish law, while Proposal 5 seeks to renew the board's authority to opt out of statutory preemption rights. Proposal 6 aims to increase the maximum number of directors who may be appointed to the board. Finally, Proposal 7 is there to approve amendments to the company's Articles of Association. Based on what was discussed, we can see what management considers important to the future success of PERRIGO. Many of the board member qualifications are in financial expertise and merger and acquisition and corporate development, in case there are plans in the works to purchase or be purchased. So what's my take on PERRIGO? Well, while they are showing adjusted profits and margins, revenue is down. The leadership compensation is performance-based, so it should be reasonably aligned. ESG initiatives are present, so it seems that they are serious and not just paying lip service. All in all, it seems to be steadying the ship by implementing changes they have had planned for years and may prove fruitful given some more time. That's all for this edition of Corporate Decoder. If you found this breakdown helpful, please give us a like, share your thoughts in the comments, and subscribe for more deep dives into the world of corporate filings. Until next time, stay informed.